Welcome back to FundaTech Insights, where we break down the markets, the madness, and occasionally the mistakes, mostly mine. Today we're talking about Rezolve AI, ticker RZLV. And joining me is our resident analyst, the brilliant, caffeinated, and slightly overworked Maddie. How's it going?
I'm doing great. I've had 2 coffees, an energy drink, and the NASDAQ open. So my heart rate is about 400 beats per minute, which is perfect for talking small cap AI stocks.
Ideal conditions. All right, let's start with the basics. What even is RZLV?
Rezolve AI is a NASDAQ-listed tech company focused on AI-driven commerce. Think of them like the friend who tries to help you shop online, except much smarter and, unlike that friend, not trying to convince you to buy things you don't need. They've got this Brain Suite platform.
Brain Suite? Sounds like either cutting-edge software or a hotel room where Elon Musk sleeps.
Honestly, both feel plausible at this point. But no, Brain Suite is their bundle of AI tools for retailers, personalized shopping experiences, smoother checkout, automated assistance. Essentially, they're trying to make e-commerce smarter and way more efficient.
Love it. So what's the stock doing? Give us the spicy numbers.
As of the latest data, shares are hovering around $3. Market cap's just under $1 billion. Volume's been wild lately. Tens of millions of shares trading daily, and the average volume sits somewhere between 13 and 21 million shares, depending on which market data source you look at.
So it's liquid enough for me to make bad decisions quickly.
Exactly. Very forgiving that way.
And catalysts? I know small cap AI stocks don't move without some narrative jet fuel.
Oh, RZLV has had plenty. They've been partnering with major cloud marketplaces, Microsoft Azure, Google Cloud. Those deals open distribution channels that could really scale.
They also raised guidance recently, which is a big deal. They're targeting $150 million in ARR for 2025 and aiming for a $500 million exit run rate in 2026. Wait, those are aggressive numbers.
Yes, ambitious like someone signing up for a marathon after running 1 mile on a treadmill. But the market loves ambition if it's even partly achievable.
What about earnings? People love to know if companies are burning or earning.
Well, they're in high growth mode. Their recent numbers, around $6.3 million revenue in the first half of 2025, huge year-over-year jump, but still negative EPS. That's expected for a small-cap AI expansion story, but it does mean investors need patience or a therapist.
Probably both. All right, let's get nerdy. What do the charts say? And pretend our listeners can't see you doing the hand gestures nobody asked for.
I refuse to censor my technical analysis choreography. Anyway, on the chart, we've got support around $2.75 to $2.97. That's where buyers have stepped in before. Resistance is around $3.20 to $3.50, and then a bigger wall near $4.50 to $5. Price is also below the 50-day moving average, but hovering near the 200-day, which is kind of like standing outside a locked door looking in, wondering if the bull trend will let you back inside.
I've been there. Emotionally, anyway.
The RSI has been in that neutral to slightly oversold zone, so no major extremes. It's a setup that could go either way depending on news flow.
Speaking of which, how do analysts feel? Are they crushing dreams or cheering this thing on?
Analysts are surprisingly upbeat. Consensus is in the buy to strong buy range, and the average price target around $10. Some are as low as 7, some as high as 15.
Wait. That's basically analysts believe, just like I believe I'll stop eating chips after 8 p.m. It's aspirational.
Exactly.
And what's the crowd saying? Anything memey here?
Not full meme status, but definitely some chatter on stock twits and Reddit. Retail traders have taken an interest, especially when volume spikes. Short interest is notable, around 12 million shares short, but days to cover is low. So odds of a classic short squeeze are limited unless something dramatic happens.
Well, markets do love drama, more than my ex.
That's fair. But overall, this is a company with real partnerships, ambitious growth targets, and significant volatility. Big upside if they execute. Big risk if they don't.
So, basically, high potential, high caffeine, high drama. Sounds like our show.
Exactly. Just with fewer commercial AI tools.
All right, that's all for today's episode of FundaTech Insights. Remember, folks, this isn't financial advice, just mildly entertaining market therapy. Catch us in the next episode when Maddie explains about the next stock. Till then, take care of yourself, bye-bye, and keep investing.